The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box. I'm Karen Cho with Steve Sedgwick on assignment, and these are your headlines. The world waits in suspense with President Trump set to announce a series of sweeping reciprocal trade tariffs today, expected to take effect immediately.
Well, the UK apparently is holding out for a last-minute US tariff deal, but Brussels goes on the offensive, pledging a strong plan in retaliation. We're going to discuss with the former German Economy Minister, Peter Altmaier, and the Irish Trade Promotion Minister, Niamh Smith. All that on CNBC programming. Tesla
sales hit the skids in Europe as stiff competition from Chinese rivals and a buyer backlash over Elon Musk's political views take root. US venture capital giant Dan Andreessen Horowitz reportedly eyes an investment in TikTok as the deadline looms for Chinese owner ByteDance to sell or face a US ban. We are now just hours away from President Donald Trump's tariff announcement, with America and its trading partners holding their breath. The White House has provided little detail on what to expect, but what we do know is this. Reciprocal tariffs will take force from today, immediately after the announcement. Treasury Secretary Scott Bessent has labelled this as a cap of the highest duty level, which could go down if countries meet demands. On Tuesday, the Washington Post reported that one draft proposal would see the US impose a levy of 20% across nearly all imports into the United States. Donald Trump will deliver his tariff announcement in the Rose Garden today at 4 p.m. Eastern Time. That's 9 p.m. BST, in an event some are calling Make America Wealthy Again. Alongside reciprocal tariffs, there are further measures coming into effect from today. The US will place an extra 25% levy on countries that buy oil from Venezuela. It will also lift the pause on additional duties on Mexico and Canada. And the 25% tariff on all autos imported into the states that Trump announced last week will also come into force from Thursday. Europe is planning to retaliate. European Commission President Ursula von der Leyen has vowed to respond with a strong plan against the United States, telling the US Parliament on Tuesday that the bloc holds a lot of cards in negotiations. Meanwhile, UK Prime Minister Keir Starmer has reportedly told cabinet members that they should brace for tariffs to hit the UK from today, but that he remains hopeful of striking a deal down the line. Starmer has already signalled he's willing to pare back the UK's digital services tax on American tech companies. So, Steve, the big question today is, will we see a response immediately from some countries as well as we see some of those tariffs issued? Just how blanket will they be? Will we be talking about a 20% number across the board? Will they be bespoke, targeting particular countries that the United States has issues with? And will there be any special relationship carve-outs? So I think a lot of moving pieces here for the global economy and for markets that have turned very cautious ahead of the developments.
Yeah, and all of those questions cannot be answered in the next 3 hours. So all we can do is prepare people as much as possible. I'm actually in, and I don't know if I'll just step out very, very quickly so Ed can just say, I'm actually in Versailles of all places. It is absolutely a stunning part of Paris, as all our viewers, I'm sure, are aware as well. But I'm actually here on assignment, as you mentioned, and I'm going to be speaking about energy with one of the top oil men here in Europe, in fact, globally, a little bit later on today. But so I kind of want to come at this just from one specific angle. I'm back on my old energy beat just for one day today, because even if you just look at one sector, you can see just the confusion that will reign as well. And it got me thinking about Elizabeth Barrett Browning and that stunningly beautiful poem, How Do I Love Thee? Let me count the ways. Well, this is kind of let me count the ways that only one industry can get absolutely, for want of a better word, screwed over by the events of today. For a start, of course, the energy industry responds to the underlying economy. We could well have recession plus inflation, i.e. some form of stagflation, heightened risk on the back of this announcement. Prices go up, activity goes down, the rest is for the economics books as well. Two, the direct cost for the industry, for the actual energy companies, for the freight companies, for the shipping companies, for anyone involved in buying products. If energy tariffs go up on Canada, on Mexico, on Venezuela, on Russia, on Iran, you name it, across the board, that is going to be a direct cost on the industry, and ergo have effect on the companies, have effect on their selling prices, have an effect on the stock market valuation as well. Reciprocal action, you mentioned that. Some countries are just going to hang on, others are going to reciprocate straight away. We've seen how aggressive the response was from the Ontario governor, Doug Ford, as well. He said, okay, you do that to us, we'll do it back to you as well with 25% electricity tariffs. And the integration, for anyone who knows, and I've done a lot of work on this one, the integration of the northern USA and southern Canada, the electricity systems, it's absolutely huge. The electricity flows both ways. There are 31 high voltage lines between the two as well. So you can see that net the US is a consumer. If they get reciprocal tariffs from the Canadians, that could be very, very expensive for Americans, and dare I say it, for American voters as well. Secondary tariffs, we talk about this, i.e. if the US puts tariffs on certain regimes, whether it be Venezuela and what have you, and others are buying product from those countries, then they're going to get tariffs as well. This could mean the Chinese, this could mean the Indians as well, because they're big buyers of Iranian products, and if the Iranian tariffs are part of this as well, because it's not just about trade. This is about fentanyl, it's about illegal immigration, it's about where you see your foes geopolitically as well, and Venezuela ticks all of those boxes. So Venezuelan oil already coming off the table, and there'll be secondary tariffs there. What about Iranian oil? What about the Russians? We don't know what's going on there. One thing we do know is that President Trump has been very hard on the Ukrainians and Zelensky for a long time. But last week, apparently he was, and I'll just abbreviate this, peed off. That's not what he said. He said something else. Peed off with the Russians, and there could be tariffs on Russian products. Well, we know that the Indians and the Chinese are enormous buyers of that product. We're talking 1.5 to 2 million barrels a day if you include the seaborne freight as well. So what happens there with the relations? And again, will there be reciprocal tariffs from the Chinese and Indians back at the Americans? The Indians are trying very hard not to have that, as indeed are others such as the Vietnamese as well. What about OPEC? We haven't talked about OPEC. OPEC Plus, if you've got tariffs on Venezuela, tariffs on Iran, tariffs on Russia, who are all part of OPEC Plus, what does it mean for them? Climate concerns, again, what does it mean for the move to net zero? And the final one, which I think is just as important for everyone out there, is what does it do to investment? Does it drive investment into the US like the president wants, or does it drive investment away because of the volatility? That is just one part of the global economy. Energy I've just covered there, and all of those questions are being asked today. Karen.
Steve, we've got a lot of moving pieces today. Now, speaking to CNBC, Allianz Chief Economic Advisor Mohamed El-Erian underlined the risk, but also the opportunity around today's tariff announcement.
I think we're looking at a 50-50 outcome, and I hate saying this. This could be a major rewiring of the domestic economy and of the global economy, a la Thatcher, a la Reagan, where you get a more enabled private sector, streamlined government, a fairer trading system. Or alternatively, if we get tit-for-tat tariffs, we slip into stagflation. And that stagflation becomes well anchored, and that becomes problematic.
Joining us now is Peter Altmaier, who is the former Federal Minister for Economic Affairs and Energy from Germany. Thank you so much for joining us today. We've been just setting the scene that it's going to be a very thorny day for a lot of countries. What are you hoping for, as it looks like it may be painful all round, but what are the best case scenarios that you're hoping for?
Whatever the president will announce in a couple of hours, it's not coming by a surprise. He has spoken about it during the campaign, and it's totally different from his tariffs approach in his first term. What he's now going to announce will mean a severe distortion of international trade, and it will make life more expensive. It will lower standards of life for millions of American citizens in the first place, but it will have a harmful effect on the global economy as well. It marks the end of an era where lower tariffs and even the abolishment of tariffs for decades have contributed to raising standard of living and were beneficiary for all.
There's no doubt that Europe has been working on its response, any preemptive work here. And the ECB tallied up the numbers saying, look, there could be a hit to growth of 0.3%, but if we see retaliation, that hit to growth will step up to about 0.5%. If you look at the reaction from those surveyed, YouGov poll was suggesting that populations want Europe to respond if there are tariffs. What should the response be from Europe?
Yeah, certainly there will be a response, but I expect it to be a very differentiated and a very smart response. I cannot see any good in entering a race to not to the bottom but to the height. In reciprocal tariffs around the globe, it will benefit other countries than Europe and the US. What we have to clarify in the first place is Mr. Trump, is the American government interested in achieving a deal, in achieving mutual agreements in some area at least, as it was the case 4 or 5 years ago? Second question is, what are the areas where the US economy was benefiting largely from lower tariffs in Europe, and where the access to European markets for some American products was very easy and comfortable? I expect some answers in this respect, but I would prefer a new initiative by the European Commission to extend free trade arrangements with other countries worldwide. We were looking for countries in Latin America so far, and some other countries in the Asian Pacific area. I think we should develop a more general approach and offer lower tariffs and mutual abolishment of tariffs to all countries worldwide who are interested to join such an alliance led by European Union.
And yet here, Altmaier, on so many other levels, I think this could actually be a positive catalyst for a Europe that has relied too much previously on its energy from Russia, perhaps is being persuaded by the Americans to rely too much on their energy going forward as well. So perhaps Europe will develop some form of autarky in many ways and look at its own regulations and look at the single market and look at how the economy is structured in Europe as a response to this, rather than just worrying about the tariff side of things. Actually, maybe a very positive response from Europe at a Commission level. We have the Draghi report, we have the letter report, we know the recipe. We just need to move quickly, don't we?
Well, I agree that many announcements made by the president so far, and certainly what he will say this morning, have strengthened and will further strengthen solidarity within European Union. Already today, the European Union is better prepared to respond than it was 5 years ago. And as far as the Draghi report is concerned, yes, I have been always advocating, even as a former Secretary of Trade in Germany, advocating a transposition of the Draghi report in concrete action by the European Union. I can see many occasions coming in the next couple of months where we can take action and where we can strengthen even our economy in the global context.
Herr Altmaier, we do face the uncomfortable situation, though, that there is another behemoth out there who will look for more markets to offset what they lose in the United States, and that is China especially as well. The difficulty of the relationship, it is not just bilateral, US and Europe as well. Europe needs a better strategy for dealing with China as well, doesn't it?
The interesting aspect is that Mr. Trump in his first term was looking at China, and he wanted to contain the Chinese economic expansion around the globe. And now my impression is his accent has shifted towards Europe, towards Canada, towards other allies of the United States. Whatever that means for the European-Chinese relationship remains to be established. Whether the Chinese will look for a bilateral deal with the Americans or whether the Chinese will join the rest of the world in the desire for lower tariffs. But that would mean, by the way, that China would have to accept a level playing field in many areas of international trade policy that does not yet exist. I'm speaking about state aid. I'm speaking about the better protection of foreign copyright and many other issues. If China would like to be accepted as a fair partner in international trade, it has to be fair itself, and they have a lot of homework still to do in this regard.
Let me weigh in and ask you about Russia, because today's tariff decision is not just one that has trade implications. There are geopolitical consequences here too. And it was only recently a senior member of the CDU, this is Michael Kretschmer, has said that perhaps Germany should discuss easing sanctions on Moscow because those sanctions are hurting Germany more than they're hurting Russia. What do you think? If we see more pain from tariffs, is it time to rethink those sanctions and discuss energy policy again with the Russians?
Well, my good old friend Michael Kretschmer from Saxony has defended this position already for a couple of years. It is well known in Germany, but we are part of the European and International Alliance, and we have announced that the sanctions against Russia will continue to exist as long as the Russian aggression against Ukraine continues. That's a very important point. And so far, the European Union was able to uphold these sanctions. And I cannot yet see any movement by President Putin of Russia to end this war. And as we have learned recently, the day before yesterday, even the President Trump is apparently not very much amused by the responses given by President Putin to the American peace initiatives.
Very tough negotiations unfolding, aren't they? Thank you so much for joining us today. Peter Altmaier with us, former Federal Minister for Economic Affairs and Energy for Germany. Well, we will be getting more reaction out of Europe this morning. We'll hear from Ireland's Trade Minister Niamh Smith at 9 a.m. BST. Coming up on the show, the world awaits Trump's big tariff announcements. We'll discuss how the measures could hit the energy sector. Plus, the clock is counting down for TikTok as the Chinese-owned app races to find a buyer. We'll bring you that story this hour. And as tariffs look set to hurt consumers, how are they faring in Europe? We'll get the latest from Michael Field, Chief Equity Strategist at Morningstar. That is coming up at 8:45. As traders await further tariff announcements from US President Trump, corporates are braced for the impact. 259 S&P 500 companies referenced tariffs on their fourth quarter earnings call, according to data compiled by FactSet through to the 6th of March. That's the most in 10 years, surpassing the previous high from the second quarter of 2018 under Trump's last administration. BMW warned it expects the costs of tariffs to amount to around €1 billion in the year ahead. We spoke to the automaker's CEO along with a raft of C-suite executives this earnings season, asking for their take on the trade turmoil.
The world will see very quickly that this might not be the smartest way to improve your competitiveness. And there's strong signs at the same time that there's a future for free trade. And we will see in the next 12 to 18 months a shift in attitude toward tariffs.
Escalation of tariffs, the tariff wars would most likely translate into economic consequences in terms of potential recessions or inflationary pressure, which in turn would force central banks to stop the easing path and potentially even have to reverse.
We need to wait to see how it plays out, of course, but we're preparing ourselves to see whether we need to start looking at production relocation or even supplier relocation to different parts of the world. So it's going to be turbulent. As I say, that's going to be part of the challenge for 25.
The biggest impact for Siemens would come from, let's say, an increase in inflation if it comes to tariffs. Obviously, if you limit trade, free trade, that increases inflation, eventually dampens growth.
Let's check on the markets today as we gear up for tariff day. And you can see it is a very cautious day of trade across the region. Japanese stocks ticking higher, but they did have a leg down recently, so only picking up a little bit of speed in that context. Hong Kong stocks are weaker, along with South Korea names down 0.7. And it is the Chinese market that is proving somewhat resilient, up 0.2%. To US markets yesterday on the eve of what Trump is calling Liberation Day. I think many people may see that title as out of context versus what they're bracing for today. The Dow is seen flat as we close the session out, but there was green moving back onto the boards for the S&P 500, also for the Nasdaq. So a concentration around some of those FANG plus stocks where investors were turning to. And don't forget, previously when we've been talking about any macroeconomic slowdown, it has been defensive names like technology where you have seen some appetite. And I've got to say the yield has drifted off in that context. We've seen those 10-year Treasury yields, the 2-year Treasury yields also move into reverse as we've seen some concerns about slippage economically. So the 2-year this morning with 3.90, the 10-year 4.19 is where we're trading. The dollar as a result. Now, the dollar has shown recently that it may not be an all-weather currency. We've seen some movement this year. As we gear up for today, you can see euro dollar is flat with 107.89. Sterling also tilted slightly weaker to being flat, 129.13. The trade that you are seeing the movement in has been around dollar yen. And don't forget, yen is typically seen as somewhat of a safe haven currency, but a bit of movement to the upside for dollar there. And you can see dollar firma versus Swissy. So at this hour, it seems like greenback is making some gains across the various pairs and crosses. To WTI and Brent, now we were seeing Steve just flesh out some of the energy consequences around Venezuela today and what may be coming on the tariff front for those that are taking product from that country. But we are seeing prices this morning fairly flat with 71.22 on WTI and Brent prices just off the 74.5. Where there has been appetite, it'll be no surprise it will go to safe haven in most environments, but particularly under the tariff situation. Gold has been all dominant, and you can see again we're trading around those records. We've marched high up about 0.2%. Now, the investment banks, they have had a very busy time of changing forecasts. Goldman's is forecasting that a 10% universal tariff on oil would lead to higher US wholesale and retail prices without any clear boost to domestic producers or impact on trade flows. However, it says any tariff above 10% would lead to a major increase in US refined product prices and throw global freight markets into the unknown. Steve will be speaking to the CEO of Total Energies, Patrick Pouyanné, later today. We will bring you that conversation on Squawk Box tomorrow. Key French industries, including aviation, pharma and wines, along with spirits, could take a hit if President Trump enacts his tariffs, including a pledge to impose a 200% levy on alcohol from the EU. Well, Charlotte joins us with more. Charlotte, what is jumping out around this tariff conversation already without the detail is that there may be a disproportionate effect on some countries. How is France looking as we talk about alcohol and all the amazing products that come out of France? Are they in Trump's tariff sight?
Well, yeah. Overall, France is a little bit less exposed than some of its neighbors. The US represents 6% of all French exports against 11% for Germany or 15% for the UK. So you could see potentially less impact. But as you were saying, some sectors could be heavily impacted. And the wines and spirits sector is one that is particularly potentially a victim of the tariffs. So you remember the steel and aluminium tariffs that the Trump administration put in place. The EU responded with a list of potential tariffs in response to that, 26 billion euros worth of products. As part of that, you have Kentucky bourbon that will be hit by a 50% tariff. And then in response to that, President Trump threatened to put a 200% tariffs on wine and spirits from Europe. Of course, a big bulk of that would be French wine. And we know that the French wine industry is very much exposed to the US. It is their main market. They exported 15 billion euros worth of wine and spirit last year, and the US represented 25% of this. The next biggest market is the UK with 10%. So the the US is hugely important for that sector. That is very influential in France from a social and political point of view. We know the farmers have a big voice that they can use every now and then in France, and there's a sector that has been, hit by COVID, by inflation, by change of habits. People are drinking less. Climate change, they're dealing with a lot of consequences. Part of that sector as well already impacted by tariffs. Remember, cognac and the Chinese levies already being impacted there. So you have a myriad of things happening there. Apparently, in the background, France is very much pushing for Kentucky bourbon to be removed from that list because they're so worried about the impact it could have on their sector. And we know that you have some voices potentially that get into Donald Trump's ear, including Bernard Arnault. He was at his inauguration. They produce a lot of champagne, the biggest producer of champagne. So potentially, he's making some push as well on his side. What's interesting for that sector is that we have a point of reference. We've seen some tariffs on that sector before in 2020. You remember the digital service tax. Then French wine got some tariffs of 25%. The result of that is that the French exports to the US dropped by 14% in 2020 in terms of wine. So we have a point of comparison here. So all this is happening in the background, and we know that the French authorities are worried by the impact on this.
What jumps out to me is that the nowhere to hide aspect for this conversation. I do remember speaking to some top winemakers many years back as the Chinese were getting serious about the gifting of very expensive alcohol. And the view was that we cannot simply concentrate and focus on one big market. Even if there is a very strong demand story, you need to spread our bets. But the spreading of bets, as you just highlighted, including beefing up in the United States, it was still seen as a very friendly jurisdiction.
It is really hard for them. And again, there's a whole cultural change behind it. And they say to some extent they have a bit of pricing power. People that will want to drink champagne where you can't make champagne in California. To a certain extent,
There's no
champagne is
substitution,
champagne.
let's be
Exactly.
fair.
So for some segment, the higher end of wine, the high champagne themselves you can't replace, but certainly there's a lot of them other ones that can be replaced. But apparently the US hospitality themselves are not happy about these potential tariffs coming into French wine because they make a lot of margin on those wines that they sell. And if they don't sell those wines anymore, it is impacting them as well. So there's a whole wider sector that could be impacted by this.
I just want to make a link to the next story because yesterday we were talking about Marine Le Pen's fortunes, the big domestic political story unfolding. I wonder whether this would be very unhelpful for her because the spotlight, if it's trained on her, that is very positive for her in terms of any appeals process and getting some sort of change. But now the spotlight is quickly moving on to the tariff story today.
It is. At the same time, she got a lifeline yesterday. They keep having breaking news on breaking news that her appeal will be looked at by summer 2026. So that has revived her hopes to actually run in the presidential election. So a bit of a truce at the moment on that front,
Charlotte,
potentially.
Thank you so much for that. To the point, and let me just background this for you. A Parisian Court of Appeals will review Marine Le Pen's case and issue a decision next year, giving the French far-right leader a chance of running for president. She was convicted of embezzling EU funds on Tuesday and banned from running for public office for 5 years. Le Pen was widely expected to run in the 2027 French presidential election. Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.